So there's an interesting trend in the economic world right now, and I've been studying macroeconomics now as a real estate investor, but then also as a long-term, I'd say quasi gold bug. I love hard assets, and so I've been studying what's been going on with the markets. I also have a couple of sources that I really love to follow, which is Jim Rickards or James Rickards, and he has his own kind of following and website and like newsletter that he does. It's called Paradigm Press. So I shout out to Jim Rickards. I think he is a huge wealth of knowledge, and he's somebody that's been around in enough places, so I follow him. And Von Greyerz for gold and that macro look, and with a finger always on gold, because we live in a world of fiat currency. And so, the markets move, but if you look at the core and what the central banks are holding in cash or foreign exchange reserves and gold, you can get a trend line picture. And what, as of the last few years, the central banks have returned on their long-term massive purchasing of gold. Quick win, as a gold bug, we just broke through $4,000 per ounce of gold, which is a historic moment for gold. I'm stoked to be along for the ride there because it's one of those better be lucky than good. I just happen to like gold as a cash hedge and a reserve mechanism long before I really ever believed it was going to go up that much. So that's a fun win. And I think that the big reason that I've been gathering from the macroeconomics experts, I don't claim to be one, is with the central banks buying tons, literally tons and tons of gold, and it's everybody, every nation. You're talking Russia to China to everybody in between that's smaller, the US, we're net buyers of gold. And so that's putting really a floor on the gold valuations at current. And so what's now occurring is now like the frenzy of that is starting to, cat's getting out of the bag that's happening. And so we'll see if the retail run continues on the gold price. Because at this point, the data is not clear that it's a retail run. It's a mass governmental run. And I think the big shift, the tectonic shift, happened when the war broke out between Russia and Ukraine, and Russia had to go look for other methods to settle because we locked them out of SWIFT, and then we, whatever you want to call it, temporarily seized their foreign exchange currency of dollars, which is held in one of the countries over there that settles it all within the SWIFT mechanism. And so they have $300 billion that they can't access. And so it put Russia in a vice to figure it out. So then BRICS was created, and BRICS is now settling in gold. And I think there was a lot of chatter on the internet, kind of fear-mongering around what happens if the BRICS currency becomes the big one. And there's there's a BRICS convention or whatever you want to call it, and all the countries got together and started planning on their currency. Why I follow Jim Rickards and those guys is they dive deep into that. And the bottom line is they're all settling any net trade deficits, any pieces of money that are left out on the trade table, they just settle it all in gold. And so it really seems like we're, as a world, macro economics, everyone's trending back to owning gold, which has just been literally the gold standard for thousands and thousands of years. And then you look at the market and the S&P and the Dow and all the main tech companies. AI is a whole nother bag of worms, but it's all running all-time highs, if not for sure all-time highs in certain sectors, certain stocks. But then as the indices are ripping to near all-time highs again, it just goes to show you that the fiat currency system is all being questioned on scale. And now the central banks are showing their cards that they're not trusting the fiat systems within the trade dynamics on scale to the level they used to. And so I think it's more of like a market melt up, which is that inflationary move for all of us in the dollar or in other countries. And you have a lot of challenges in different countries like China and how they're operating. And there's just a lot of influence and challenge in how they're going to long-term manipulate their currencies. And all the currencies are devaluing. All the currencies are dealing with inflation, because how do you not have when you just create more money in the end? And you're just going to end up inflating and devaluing the dollar or the currency. And I heard a funny joke. It's like, hey guys, if you're just going to print more money, talking about all the countries, if you're just going to print more money, just know that there's no race to the bottom. And the first one that breaks their currency or their economic system in their country is not the winner. And it seems like all of the fiat currencies are now just racing to the bottom of their value. And from there, the dollar is winning just because it has the most 60 to 70% adoption across the world is using the dollar. Okay, but that doesn't mean we're not going to have a devalue or an inflationary run. And so it's an interesting time. I think it's a good time to be very thoughtful about the assets that you accumulate. I think that the AI realm, sure, all of us should have bought AI stocks super early and just held, but it's a speculative run and it's not based on real price to earnings. It's like Bitcoin, mass adoption, so it's on a run. We should have all bought it when it was cheaper than it is now, but it doesn't mean that it is actually a valuable asset in the end, other than the adoption rate and the people that are willing to hold it. And it is real, but it doesn't have an underlying value proposition or use case like gold does, as the only tried and true thousands and thousands, multi-governments, multi-kingdoms. You go back to the beginning of time as we know it, and gold has been the king. And so that's why I like gold. So as you go forward with all this stuff, just know you want to be thoughtful about your approach into, if you are to work hard for money, you don't want to just hold money. In my opinion, you want to own the core assets that are going to help you in inflationary environments. And so the best one we've found is mobile home parks and gold. And then we're continuing to look at that long term. And it helps to have some, like we talk about here as like moats. You want some challenge to enter. And that's one of the big reasons we love mobile home parks is it's hard to build them. It's really cumbersome. The cities, everybody is like really standoffish and NIMBYism about bringing them into the communities. And so any way you can buy a great asset, great cash flow producing asset, or a great company, kind of like a Buffett style stock pick at a fair market price, keep it simple and invest in things that you understand. And, like Buffett's rule number one, don't lose money. Rule number two, rule number one, don't lose money. So if you keep things simple, you understand the core assets that you're buying, and you work and be productive every day to accumulate more assets, you will build real wealth in the end. All right, if you're enjoying this content, hit the subscribe button and turn on notifications, and check out the description below for our websites listed. Thanks a lot for joining.